Welcome to Manhattan 5. Tuesday, 25 August 2026, based on the US close Monday, 24 August. Here are the 5 developments that matter. Number 1. NVIDIA is now the market's exam. NVIDIA fell another 2.9%, its 7th consecutive losing session, as investors reduced exposure ahead of Wednesday's earnings. NVIDIA is no longer being judged as just one company. It has become the market's proxy for the entire AI capital expenditure cycle. Consensus expects approximately $92 billion in quarterly revenue, nearly double the comparable period last year. At these expectation levels, simply beating estimates may not be enough. Watch forward guidance, hyperscaler demand, margins, and infrastructure commitments. A strong result could reset the AI trade. A great result followed by a weak share price reaction would be the bigger warning. Number 2. The Treasury is buying bonds, but not solving the problem. The U.S. Treasury's plan to increase purchases of long-dated government bonds helped pull the 10-year Treasury yield down to approximately 4.70%. But buying back bonds does not eliminate the underlying debt. It changes the immediate balance between buyers and sellers while leaving deficits, inflation, refinancing, and future issuance unresolved. If yields rise quickly again, the bond market may be signaling a structural problem rather than a technical one. Governments can influence the price of money temporarily, but they cannot permanently repeal the cost of excessive borrowing. Number 3. Gold isn't waiting for the answer. Gold traded above US $4,600 overnight and has risen approximately 14% in the past month. That strength comes as equities wobble, governments intervene in bond markets, and investors question currencies and sovereign debt. Gold is increasingly being treated as insurance against monetary, geopolitical, and institutional uncertainty. Resistance near $4,800 matters, but after such a strong rise, chasing the price carries risk. Gold is not predicting one specific crisis. It is pricing fewer clean solutions for policymakers. Number 4. Iran has returned to the market calculation. Washington has signaled expanded economic pressure against Iran and entities dealing with it. Markets have not yet treated this as a major supply shock, but the risk can move through oil, freight, inflation expectations, and bond yields before appearing clearly in equities. Watch energy and shipping costs. If they rise while long-term yields remain elevated, technology and other long-duration assets face pressure from both directions. Number 5. AI has hit the power wall. Texas Governor Greg Abbott has intensified criticism of AI data centers and imposed a moratorium on new projects amid grid reliability concerns. The constraint is no longer just access to chips. It is reliable power, grid connections, water, land, permits, and political approval. Existing powered sites, energy producers, and grid infrastructure may capture increasing value. A data center project without secured power